If you've been waiting for a headline to tell you what's happening in Calgary's real estate market, this month is a perfect example of why that just doesn't work. Because Calgary right now isn't one market, it's several markets happening at the same time. And depending on what you're buying or selling, your experience could look completely different from the person across town. Before we get into the stats, this update is based on the February data released by the Calgary Real Estate Board, combined with what I'm seeing firsthand in real showings, negotiations, and conversations with buyers and sellers across the city. And yes, I also keep one eye on what's happening globally, because what happens out there does impact our local market here in Alberta. More on that in a bit. Oh, and one more thing before we dive in. For those of you who are regulars on this channel, you may notice over the next few months that I start looking a little rounder, particularly around the middle. That's not a new sourdough hobby. I'm expecting my third baby. So you will be watching a slowly growing bump on this channel. And I just want to say, I've been through this before. I have a strong team and absolutely nothing is changing around here. Same schedule, same updates, same level of nerdiness around real estate data. Motherhood has honestly shaped my entire career. I was laid off while on maternity leave with my first. I started my real estate practice while expecting my second, and now here I am building something I'm genuinely proud of, expecting my third. I know that many of us ambitious, career-oriented women worry about how to balance both of these things, and trust me, I've struggled many hard seasons and have had to let go of a lot of my own limiting beliefs about what I was allowed to want for my life. But making this decision to go for a third is honestly a reflection of how far I've come in overcoming those limits. You can want to be a mom and also be a badass career woman. The two can absolutely coexist, and I hope to be a source of inspiration and empowerment for those of you watching who may be on a similar journey. If this resonates with you, be sure to follow along on Instagram, where you can see more of my day-to-day life. Okay, now back to the market. In February, Calgary recorded 1,526 sales with 2,766 new listings, bringing total active inventory to 4,822 homes across the city. That puts us at 3.16 of months of supply overall. Sales were down about 11% compared to last February, driven mostly by a sharp pullback in apartment and townhouse transactions. Inventory is up 16% year over year. Now that 3.16 months of supply number matters, but only once we explain what it actually means. Because that number combines every property type: detached homes, semi-detached duplexes, townhouses, and apartments. And the moment you break it down by property type and by neighborhood, the experience buyers and sellers are having can look completely different. Here are two extremes that existed inside this same city in the same month. If you were buying a detached home in the west end of Calgary, you were looking at 1.9 months of supply, with homes averaging around 35 days on market. The benchmark price in that zone is $973,500, and it's actually up 1.42% year over year. This is a seller's market. Homes there are selling very close to asking, and multiple offer situations are still happening. And it's not just the West End. I'm seeing the same thing in specific communities like my own McKenzie Lake, where the sales to new listing ratio hit 116% in February. What does that mean? That means that more homes sold that actually came onto the market that month. Average days on market in McKenzie Lake are around 26 days. That is firmly seller territory. Meanwhile, if you were buying a condo apartment in the Northeast, you were looking at nearly 11 months of supply with the benchmark price at $260,600, which is down 14% year over year. Buyers in that segment have real leverage, and some deals are going meaningfully below asking. Two completely different realities, same city, same month, same headline number. This is exactly why citywide averages don't tell you what you actually need to know. Let's look at the numbers by property type, because this is where it gets specific. Detached homes came in at a benchmark price of $734,300 in February. This is down 3.18% year over year, but up 1% from January, which is consistent with typical seasonal patterns. After January, things tend to pick up. Months of supply across the city is 2.64 months, essentially a balanced market. The West District and City Center were the only two zones to show price gains both month over month and year over year. The tightest supply is in the West at under 2 months, while the Northeast continues to struggle with excess supply. The sales to list ratio for detached is 98.5%, meaning that sellers who price correctly are getting close to full value. And I'll say this, I do think there's real potential for price growth in detached homes in very specific desirable communities. Supply is tight, demand is steady, and if you're a buyer who's been sitting on the fence waiting for a better deal in the right community, that actually may not come. Keep that in mind. Semi-detached, or what most people just call duplexes, is the quiet standout in this market right now. The benchmark is $682,200, which is barely below where it was a year ago, less than 0.5% year over year. Sales actually improved in February, making it the only product type with year over year sales growth. Months of supply is just 2.37, the tightest of all 4 property types. Several zones, City Center, Northwest, and the West Side, are actually showing year-over-year price increases. Now, I want to be upfront. This is a tight market, so I'm not saying that you're going to walk in and find a screaming deal, but what duplexes offer is a really compelling middle ground. You're often getting more square footage than a townhome, sometimes a double car garage, and in a more established neighborhood at a more accessible price point than a fully detached home. And similar to detached, I think prices in this segment have real room to move upward. So if you're considering it, now is worth taking seriously. Now, townhouses came in at a benchmark of $423,600, down about 5% year over year. After a surge in new listings in January, things moderated in February, which helped bring months of supply down from over 4 months to just over 3 months. The steepest year over year declines are in the Northeast and the East. The West and City Center townhouse markets are only slightly below last year's levels. Overall, this segment is softer, but still moving, and as always, location makes all the difference. Now on to apartments. Apartment condos are the most challenged segment, and I want to be honest with you about that. The benchmark dropped to $298,600 in February, down over 9% year over year, and actually slightly below January's level. That matters because we normally expect things to tick up at the start of the year due to seasonal patterns. The fact that it's still sliding tells us something real about where this market is heading. Months of supply is at 4.58 citywide, with the Northeast at nearly 11 months and the East at 6.5. Less than half of newly listed apartments are actually selling in a given month. CREB's chief economist pointed directly to this. Record apartment construction last year at nearly 18,000 units currently under construction in Calgary is putting pressure on both the rental market and the resale condo market at the same time. Here's the honest message for anyone who owns an apartment right now. If you held it for a while, you have some equity, but the numbers haven't been making sense for a while now, either as a rental or just as something you want to keep, it might genuinely be time to think about getting out now before things potentially get worse. I know that's that's not what anyone wants to hear, but that's the pattern that I'm seeing. There's no clear end in sight on this trend, and if anything, with rental values continuing to soften alongside resale prices, it could get more challenging before it stabilizes. That said, there's another side to this coin. If you're an investor who is comfortable with risk and volatility, and you're able to pay cash or put down a very large down payment to protect yourself against that risk, right now could actually be a great time to pick up an apartment at a significantly discounted price. But this is absolutely not for everyone. You need to go in with your eyes wide open, run very conservative numbers, not today's rent, not optimistic projections, and make sure the deal works even if things soften further. Ideally, more than 20% down, and honestly, the more the better. This is a high risk, potentially high reward play, and caution is the word. Now, none of this is a crash. What Calgary is experiencing is a correction, and there's an important difference. A correction is the market pulling back after a period of very rapid growth. A crash involves forced selling, job losses, credit problems, and people with no choice but to sell into a falling market. Calgary is nowhere near that. If you look at Toronto and Vancouver, those markets ran for over a decade without a real reset. And what they're going through now is genuinely painful. Here, the correction is much more orderly. Real estate is extremely difficult to predict and honestly almost impossible to time perfectly. I wish I had a crystal ball, and with everything happening globally right now, even the best economists are hedging their forecast. But if things remain roughly as they are, I expect the market to stay relatively stable over the next year or two when you look at things as a whole. Apartments will be the exception and will likely face continued pressure. And as I mentioned, I do think specific detached communities and the duplex market have real potential to see price growth. That's worth keeping in mind whether you're buying or selling. If this is the type of content you've been looking for, please show your support and don't forget to like, share, and subscribe. What I saw working with buyers in February was really interesting. Several buyers were able to get genuinely great deals on homes that had been originally listed too high and finally came down to where the market actually is. At the same time, buyers are being very specific right now. They're cautious about homes on busy roads, layouts that don't work, and anything that feels like it needs too much work. The most common thing I'm hearing is buyers looking for detached homes that are over 1,700 square feet, ideally more, in established communities, and they're willing to wait for the right one. Even with overall supply being higher, the homes that buyers actually want aren't hitting the market in big numbers. That's a big part of what keeps certain segments competitive. Something else I noticed in February, commute times is back as a real factor. With return to office policies having been in place for a while now, buyers are more aware of how many minutes they're spending in the car. Every minute saved getting to work is more time with your family, more time to decompress, and real savings at the gas pump over the course of a year. Established, well-located communities are holding their value partly for exactly this reason. I also had a lot of really great conversations in February with potential sellers who are thoughtfully evaluating their options. And I love seeing this, not because I'm in any rush to list anyone's home, but because this is genuinely the best time to have those strategic conversations. Understanding what your home is worth today, what the spring market looks like, and what your options are costs you nothing. Being informed before you need to act is always better than making a reactive decision under pressure. There's also a really interesting opportunity right now for downsizers. If you're in a larger detached home in an established community and thinking about your next chapter, the math can really work well in your favor. Detached in desirable areas has held up. Townhouses and apartments have softened. That gap means you can potentially sell in a stronger market and buy into a softer part and come out ahead on both sides of the transaction. For renters thinking about becoming first-time buyers, strategy matters right now more than ever. The perfect property doesn't exist, and waiting forever has a cost too. We're already seeing certain segments stabilize, and if you're pre-approved and financially ready, being deliberate right now can genuinely pay off. Now let's talk about what's happening globally, because it does impact our market here, and in Alberta's case, it could actually be significant. Over the past week, the United States and Israel launched military operations against the Iranian regime. Counterattacks have followed across the Middle East, and shipping through the Strait of Hormuz, which carries approximately 20% of the world's oil and liquefied natural gas, has been effectively disrupted. Nobody wants war, but I'll be honest, as a Venezuelan, this is a relatively black and white issue for me. I am hopeful for the people of Iran. 47 years of dictatorship and the brutalities that have come with it, I truly hope that this is the beginning of a more hopeful future for them. This is not a political statement, it's a human one. Now, what does this mean for Alberta? I'm a proud Albertan, and I know how much the energy industry feeds families across this province. Canada actually has as much oil as Iran, yet we export far less because of pipeline constraints and years of political obstacles. When a big chunk of global oil supply gets disrupted the way it has been, the world starts looking for stable, reliable alternatives, and Canada is one of them. LNG Canada Phase 1, which came online last summer, is ramping up at exactly the moment global natural gas supply is being squeezed. That's meaningful for Alberta producers, and if oil gets above $75 a barrel and stays there, honestly, you can throw out most of the cautious predictions you're hearing about the Calgary real estate market right now, including this one. That changes the economic picture for this province in a big way. But here's the part that people often miss, and it matters if you're thinking about buying. Higher energy prices create inflation, and when inflation rises, the Bank of Canada becomes more cautious about cutting rates, and if anything, rate hikes can actually come back onto the table. Here's something worth understanding. Your fixed mortgage rate doesn't directly follow the Bank of Canada rate. It follows Government of Canada bond yields. When markets start pricing in inflation, which we're already beginning to see, bond yields rise and your fixed rate can go up before the Bank of Canada has done anything at all. Events happening halfway around the world can absolutely affect mortgage affordability right here. And this can all be confusing because at the end of the day, Canada still has a very sluggish economy. And if all of this Iran and global issues go away and we stay in a sluggish economy, rate cuts could actually be in the future. So there's no crystal ball. There's a lot of confusion with regards to the rate environment. If you're a buyer, it's worth paying attention to how this unfolds. And one practical step you can take right now is get a pre-approval. A pre-approval holds your rate for up to 90 days. So if rates move higher, you're protected at the better rate. It costs you nothing and it gives you real peace of mind. There's also something I want to share about how the rest of the world is seeing Calgary right now, because the results were honestly amazing. Research firm Stone Olafson recently surveyed business leaders and professionals in Toronto, Vancouver, Seattle, Silicon Valley, and Denver. 73% of respondents in Canada and the US said they would consider relocating to Calgary, up from 54% just 1 year ago. Those who see Calgary as having a diverse economy increased by 22%. Those who see it as a place to build a career, up 20%. And Calgary is now the most favored destination for American talent considering a move to Canada. The Blue Sky City campaign is working. The world is starting to figure out what we've known for a long time. And with that increased interest and population growth come growing pains too. We see it in our schools, schools, our hospitals, our infrastructure. This is all happening fast, and we have to make sure the jobs are there, the services are there, and that we're building a province where people don't just move to, but stay and truly thrive. For sellers, if spring is your goal, your window is right now. Calgary's strongest period for selling detached homes runs roughly from March through early July. If you need to close before families are settled for the school year, your listing needs to be live in March, April, May, or June, with early July being the absolute latest realistic window for most. Once you're mid-July and beyond, that window has largely closed for the year. I can't control the market, but I can control the preparation, the marketing, and the strategic timing. And when all three of those things align, the results speak for themselves. Whether you're thinking about selling this spring, next year, or you just want to understand what your home is worth today, that conversation is always worth having. No commitment, just a consultation. A couple of things before I wrap up. First, I'm launching community webinars. If you want a real deep dive on a specific neighborhood, the data, what's selling, what's sitting, what the next years might look like, stay tuned to my socials and comment below which communities you'd like me to cover. I want to build these around what you actually want to know. Second, I host a Calgary Leadership Book Club and Mastermind. It's completely complimentary, it's virtual, and it happens on the last Wednesday of the month over the lunch hour. Last month we read Essentialism, before that we read The Big Leap, and this month we're reading Buy Back Your Time by Dean Martell, which if you're a busy entrepreneur or a professional is incredibly relevant to all of us. No pitching, no selling, just real conversations about growth. Comment book club below and I'll send you all the details. And finally, if this video brought you value, please share it with someone who's been trying to make sense of this market. Please know that the market in Calgary right now is fragmented, and what applies to one person's situation may look completely different for another's. Proper guidance matters more right now than it has in years. Subscribe so you can watch the next update, and come find me on Instagram if you want to follow along beyond the numbers. I'll see you next month.